Pablo, good to see you. How you doing? How you been? Tor, good to see you as well. Evening. How you doing? How you been? Hi, Miles. When case over XRP? Johnny, good to see you as well. How you doing? How you been? The case should be over anytime soon, to be fairly honest. We're in the week of crypto legislations as well. The longer this case essentially draws out, the worse it looks for the SEC, to be fairly honest. Good day, Miles. Mike, good to see you as well. How you doing? How you been? Hi, Miles. Great week for crypto. It definitely is. Let's go on to this thing. Absolutely facts. It is the crypto week for the Republican Party and the anti-crypto week for the Democratic Party. But, you know, who listens to the Democratic Party, to be fairly honest? Good evening, Miles and CMF. Let's go. Denise, good to see you as well. How you doing? How you been? Let's go. A lot of good news has been happening around the world, to be fairly honest, regarding cryptocurrencies. Some that make essentially traditional assets look weak, which in alternative assets like cryptocurrencies once again becomes appealing. And it's no longer the speculative category. So when XRP can hit $10, the regulations, if the regulation is essentially in this crypto week, apparently we're going to get votes in this crypto week, not the retail section, but the senators and the governors. So it's going to be Wednesday, there's going to be one particular vote for the Genius Act. And then on Thursday, it's going to be another vote. And they're going to continuous vote as well on the 3 acts, which is the anti-CBDC, the essentially Genius Act, and the Clarity Act. So we possibly actually going to have crypto regulations in this 1 week, all 3 passed. So expected for those lines. And hello, Miles. T, good to see you. How you doing? How you been? JP, good evening, Miles and all CMF. Good to see you. How you doing, brother? How you been, JP? So let's start this live show off, and then we'll do intro disclaimer about that everyone's tuned in for the first part of the live. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. I host this live that you're watching right now. You can tune to this live Monday to Friday to know about the latest news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much everything you need to know about regarding this world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, this is episode 333 of the CMF Live, which is incredible that we're on episode 333. There's so many things that's been happening around the world right now, which we're about to essentially cover on tonight's live, especially the crypto week and the common asked questions regarding the crypto week. And also, just want to take a second to say thank you so much to everybody from the CMF who has liked this live, retweeted this live already, and put a comment outside the live. If you're watching this on X, if you're watching this on YouTube, thank you so much to everyone who's also liked the live and put a comment outside the live as well. As I said previously, CMF members, the only way we're going to grow this family is with your help. I can only do so much for the CMF, but to grow this family, I need your help. So like, retweet, and put a comment outside the live if you already haven't. If you have, thank you so much. Now, tonight, we're going to be talking about quite a lot of things, essentially. Things essentially to do with the Federal Reserve, the committee that's going on for the crypto week. We have news from the Bank of England, for example. We have news from Europe. We have news from Trump. We have news on tariffs. We have news on policies. And we have news on essentially analyst reports that have come out. So quite a lot of things to cover on tonight's live. What are the major events happening this week? The major event that's happening this week is the Clarity Act, the Anti-CBDC Act, and the Genius Act that's going on for the crypto week. Straight after the crypto week, we're going to get essentially a crypto report coming in from the White House also. Monday, let's go, Mike. So which time can I see big pumps soon? My mom, Johnny, don't worry, you'll survive. What are your major events? What are the major events? That's what the major events are. Good evening, Miles. Hope you're well and had a great weekend. Let's go, Addy. Good to see you. How you doing? How you been? Perfect timing also. Good evening, Miles, the CMF. Khalid, good to see you. How you doing? Perfect time. Because we're about to go through the first news on tonight's live, which is regarding the Federal Reserve. So the rumor has been going around, it's been circulating that the Fed chairman, Jerome Powell, could be essentially resigning. Apparently he's thinking about resigning. And it seems like Trump has, essentially his plan has worked to remove the Federal Reserve, even though it looks like he might be resigning by himself. It could be also that there's a push from Trump's administration to remove him from his seat. Now, while that's going on, the Federal Reserve has come out and tried to play it off as they're independent from the government, and that no government agency is able to essentially make or dictate any sort of decisions for the Federal Reserve, and that the Federal Reserve remains independent and stands essentially independent. So here it is. The Federal Reserve emphasizes independence aimed at leadership, essentially speculation that's going around. The Federal Reserve's independence reassures markets as leadership speculations raise concerns about future monetary policy shifts. Now, this essentially emphasizes on the Federal Reserve's independence comes as Jerome Powell remains silent on potential leadership transitions. Observers focus on monetary policy implications, giving Powell's essentially seasoned economic background. Federal Reserve stance highlights that its commitment to unbiased essentially economic strategies and speculations surrounding the central bank's leadership involve key monetary figures. These narratives influence economic policies but do not affect immediate cryptocurrency or essentially on-chain data. If essentially Jerome Powell does decide to essentially resign, then obviously the crypto market is going to go ballistic because, we've been waiting for somebody to take Jerome Powell's essentially seat because the man refuses to do any sort of rate cuts and blames Trump's tariff policies on the reasonings of why he doesn't do rate cuts, which we've had economists come out. We've had the essentially former chairman of the World Bank even come out and say that essentially Jerome Powell is wasting everybody's time, and blaming the tariffs for not doing essentially any sort of rate cuts is a pathetic excuse. So the Federal Reserve emphasizes its independence and the importance of maintaining it because the Federal Reserve doesn't want to seem weak. That even though Jerome Powell is essentially resigning, they're trying to say as if it's not Trump that's making him resign, Jerome Powell wants to resign. Well, that is an absolute load of BS. Because let's just be clear, Jerome Powell said in an interview before Trump became president that he cannot remove him from his seat and that he will be sitting in his chairman's seat until 2026 and nobody's going to be able to remove him. All of a sudden, Jerome Powell wants to resign after all the criticism is received essentially from Trump's administration and Trump himself. And then essentially the Federal Reserve is trying to play it off as it's not, Trump that's making him resign. We're independent. Sure. The Federal Reserve hasn't been independent for the longest time. I mean, we can definitely see where the Federal Reserve stands. It's with the Democratic Party. They've never stood with the Republican Party, to be fairly honest, even though they do scream and claim they're independent. The central bank's decision, and the reason why we can tell this is by the decisions essentially Jerome Powell makes. It's never in the favor of the people in this reality in the crypto space or the Republican Party. It's always in favor of the other party. The central bank's discussions essentially influence major assets like Bitcoin and Ethereum indirectly through monetary policy impacts rather than leadership rumors. Crypto market essentially climate changes rather than specific leadership dynamics, and historical records show that the Federal Reserve's leadership changes can occasionally influence economic directions. Speculation pivots around essentially potential financial strategy shifts without direct linkages to other chain, essentially cryptocurrency activities. Insights from historical trends suggest that leadership changes may alter economic derivatives. Now, but speculative essentially rumors have been going around as well, have significant implications also. As leadership speculation essentially persists, markets await concentrated essentially statements from the Federal Reserve to navigate the financial expectations. Understanding these essentially shifts requires analysis of policy adjustments and their economic interplay. Potential essentially economic and policy adoptions remain a focal point for investors and institutions alike. Jerome Powell quits, the crypto market is going to react in a positive way. The same way Gary Gensler resigned and the crypto market reacted in a positive way, the same thing is going to be happening with Jerome Powell because the man refuses to do any sort of rate cuts, which is in favor of the crypto space. And also Trump has been telling him for the longest time. And we know that for a fact that Jerome Powell hates Trump and Trump hates him. Now, the Fed rate is what we're going to talk about next. So moving on from Jerome Powell's possible reasonings of essentially resigning, and I'm guessing they probably found something on him is the reason why he's all of a sudden resigning. But moving on from that to the Fed rate. But keeping on the topic of the Fed. So the crypto markets have stabilized, you could say. After this spike we've just suddenly had, the crypto markets slightly stabilized, and we're getting ready for our next leg up. Now, why have we stabilized? It's to do with the Fed once again. The Fed rate pause stabilized essentially Bitcoin, the cryptocurrency market, aimed essentially market uncertainty. Now, the Federal Reserve recently chose to maintain its interest rates, which has directly essentially influenced Bitcoin's price stability. Now, analysis essentially from QCP Capital noted that the Fed's wait and see stance is creating a calm environment aimed market uncertainties. Officials essentially retreated their preferences for a wait and see approach pending greater clarity and inflation trajectories. Now, the crypto space knows that there's a high chance we're not getting a rate cut this month if Jerome Powell is still sitting in the Fed, essentially in the Fed chair. However, if Jerome Powell essentially resigns this month, then that's even better than a rate cut, because at least we know the next person chosen to lead the Fed is going to be pro-crypto. So that just works in our favor in the long term. So it's better for us if Jerome Powell essentially resigns rather than doing sort of rate cuts, because if we're going to expect Jerome Powell to do rate cuts, it's going to be a decade probably. But if we just get him to resign this month, cherry on top. Major players essentially involved include the Federal Reserve, QCP Capital. By the way, I was being sarcastic by a decade. Obviously, he's essentially Fed chairman, runs up by 2026. Now, major players involved include the Federal Reserve, QCP Capital, and several institutional investors. The Euro and Asian essentially markets showed subdued responses reflecting broader macroeconomic projections. The decisions has led to Bitcoin's trading range essentially staying tight, maintaining essentially levels around $105,000. Institutional investors have shown a cautious essentially increase in involvements, looking for potential gains amidst essentially a minor market movements that are going on. The sustained interest rates have also have implications for economic policy globally. Investors speculate on the forthcoming essential rate cuts, which could affect the cryptocurrency's price point. Historically, stable interest rates have led to reduced essentially market volatility in essentially Bitcoin, as seen during the mid-2021 economic cycles. This pattern also suggests potential steadiness on the macroeconomic shifts. Potential outcomes include maintaining Bitcoin above $100,000 for the time being, assuming no adverse economic events, and historical data indicates stability during periods of Federal Reserve clarity and macroeconomic supports. So, as I said, we want obviously rate cuts from Jerome Powell this month. Are we going to get them? High chances, no. But is Jerome Powell on the verge of resigning this month? That has a higher chance than us getting rate cuts. And that works out better for us in the long term with him resigning than just doing one rate cut for us. Now, Trump is what we're going to talk about next. Before we talk about Trump, let's go inside the comment section first, and then we go straight into the next news. As I said previously, this is live, which means if you do have any questions or statements, put it down inside the comment section. More than happy to answer any questions you may have. So let's go inside the comment section first, and then we go straight into the next news. Let's see where we were at. We were at here. What are the major events happening this week? Major events happening this week essentially is the crypto event that's going on, the crypto week that's going on with the Clarity Act, the Genius Act, and the Anti-CBDC Act. And then the White House essentially crypto report that's also coming out this month, and the possibility of free legislation being passed in a week. No, it's possible. Good evening, Miles and CMF. Cali, good to see you. How you doing? How you been? Greetings, Miles and CMF. Hope all is well. Ray, good to see you. How you doing? How you been? Happy Pisces, good to see you. How you doing? How you been? Crypto Don, good to see you. How you doing? How you been? Crypto Don says, I still haven't reached my target on XRP. I need at least another month. No problem. I mean, you still have time to accumulate, you could say. Hi, Miles and CMF. Stormy, good to see you. How you doing? How you been, Stormy? Lena, good evening, Miles and CMF. You all have made my day. Really appreciate the birthday love. Let's go, Lena. It is Lena's birthday, everyone. If you didn't wish Lena a happy birthday inside the Telegram group of the CMF Telegram group, you can wish her a happy birthday inside the comment section. Lena's inside. Happy birthday, Lena. Hello, Miles. Long time. Hope all is well. CMF to the moon. Let's go, Mickey. Good to see you, brother. It has been a long time. How you been? Hi, Miles. Good to see you, all, Michael. How you been? How's things? How are you today? I'm doing great. What did I miss? Just the Federal Reserve news that we went through, but I'll do a little gist at the end. Hi, Miles, the CMF Golden Dragon, good to see you. How you doing? How you been? So, Trump essentially, Woodhouse, good to see you, brother. How you doing? How you been? Trump threatens 100% tariffs on Russia, aimed at the tensions that are going on right now. So, Donald Trump's current U.S. president intensified economic tensions with Russia by threatening 100% tariff on Russian products if no agreement is reached within 50 days. The declaration was a strict move to essentially exert pressure on Russia. The prospective tariff is sparking essentially volatility across markets. Financial analysts believe that this could essentially escalate trade tensions right now, with potential broader implications. Now, the crypto market reacts with increased trading activities, especially in assets like Bitcoin, and essentially XRP has been doing tremendously well for itself, so as XLM. In response to Trump's announcements, there is a essentially pronounced shift towards digital assets as investors seek security and geopolitical uncertainty. In the past, cryptocurrencies were very, very speculative. Now they're actually becoming the type of asset investors want to enter into to move away from traditional assets, which is what we essentially originally wanted inside the crypto space, for people to realize that they should slowly start shifting away from traditional assets and enter the crypto space, because that's the space that's going to revolutionize everything around us, including, essentially just giving one factor, tokenization. Everything around you will essentially be on the blockchain. So the crypto space essentially is this big, but it's the space that's going to revolutionize every market sector around the world and everything around you. So in response to Trump's announcements, there is a pronounced shift towards digital assets. Investors seek security amid all the geopolitical tensions that are going on. Now, with no statements from Russia's officials, market participants anticipate further developments over the next weeks. During previous rounds of tariff threats, Bitcoin's value often increased and essentially decreased, echoing investor sentiments seeking havens and during these political times. If no agreement is reached within 50 days, severe tariffs will be imposed on Russia, Donald Trump said. Bitcoin's current price is roughly standing at 120,000, somewhere near it, with a market cap of $2.39 essentially trillion as the time of this article is written, as per CoinMarketCap. The price marked essentially a 42.79% increase over the past 90 days. The 24-hour trading volume surged about 281.95%, and highlighting the market activities due to tariff tensions. The research teams also have essentially of this particular news channel has essentially forecasted regulatory and financial shifts from tariffs, and is one of the main reasons that essentially the crypto market is spiking up. Obviously, there are other reasons in play as well, with the Fed chairman on the possible verge of resigning. Now, moving on, essentially from Trump putting 100% tariff pressure on Russia. But honestly, the good thing is, in the past, when we had tariff news come out, the crypto market was shaking all over the place and people were panic selling some assets inside the crypto space. Now, tariff news isn't impacting the crypto market. It's actually, the crypto market is reacting how it should be, in a positive way, towards traditional assets failing, where the crypto market could be seen as an alternative asset space that people would enter into. So now tariff news isn't impacting crypto. It's actually impacting crypto in a positive rather than negative. Also, geopolitical tensions should be essentially a positive thing for the crypto space, not a negative, because it's not being seen as a speculative space anymore that much. So moving on from the 100% tariff situations that could play out positive for the crypto space rather than negative, as I said previously, to EU. So it's not just essentially Trump putting that pressure essentially on Russia or any other nation out there regarding tariffs. The EU is also about to put pressure on the US on retaliations of tariffs. So here it is. EU prepares 72 billion euro counter tariff against the US. The European Commissioner's Commissioner for Trade and Economic Security stated today that the EU is prepared to impose a counter tariffs on US imports with 72 billion euros if trade talks fail. President Trump announced new EU import tariffs starting August 1st, leading to EU discussions. This raises tensions between the EU and the US, potentially affecting essentially global markets, while direct crypto impacts remain low. Broader essential risk aversions on the might increase volatility essentially across financial assets as seen in historical trade disputes. The EU is poised to essentially respond with counter tariffs against the US following President Trump's announcements of a 30% tariff on EU imports starting August 1st. Morris essentially emphasized the significant financial disruptions this could cause, hinting at substantial economic ramifications if unresolved. Trump's unliterate essentially trade decisions could strain economic ties also, elevating risk with essentially cross-Atlantic essentially commerce valued at approximately 4 billion euros essentially daily. EU leaders, including Ursula von, sought essentially readiness to deploy substantial countermeasures and potentially impacting a vast area of imports. A 30% tariff would make it almost impossible to continue trade, as it currently generates approximately 4 billion euros daily, while considered proportional countermeasures remain an option if a deal is not finalized. Morris said, essentially the Commission's vice president of the European Union. Now, key figures like Ursula essentially advocate for dialogue, but stress the necessities for actionable responses. Danish and Irish officials also echo sentiments of negotiations favoring, while preparing for immediate EU action if diplomatic efforts do fail between the US and the EU. Analysts also highlight the potential for broader market impacts with these tensions going on, especially if financials and technological independencies are essentially disrupted. The EU's preparedness reflects a strict approach to safeguard its economic interests amidst the possible transatlantic essentially tensions that are going on right now. So EU and US are going back and forward right now. The EU is actually trying to pressure Donald Trump by saying essentially the loss that they're going to be having, all the $72 billion euros of a counter essentially measure on that matter. Let me put this one thing clear. The EU actually did announce once, or more than once, that they see it as the perfect time to take over the dollar. The EU wants to take over the dollar. They said it's at the perfect time. I mean, the EU essentially bank and the European Central Bank also mentioned it, that it's their perfect time to take over the US dollar because the US dollar is acting weak and so on, and with all the trade tensions and geopolitical tensions that are going on. The EU is never going to be able to take over the dollar. It's just never going to happen. Even in a digital format, I mean, who's ranking number one as a stablecoin? USDT. What's USDT? Digital US dollars. What's essentially next? USDC. What's that? Digital US dollars. Even in a digital world, the US dollars is already ranking number one. The EU is never going to be able to catch up or even place itself as number one. Neither is China. Essentially how hard they try to do that with the digital yuan. Nobody's going to be using that except their own citizens and essentially Hong Kong. Let's just be honest with ourselves. But the EU thinks it's a smart idea to go head-to-head with Donald Trump on a countermeasure. That's going to play out very bad, and the EU will realize that very soon. But again, the crypto market's not reacting in a negative way. You know, this essentially balls out. The crypto market should be essentially should be seen as a positive market space to enter into. So that could actually work out as a positive for us once again. Now, Vanguard is what we're going to talk about next. But before we talk about Vanguard, let's go inside the comment section first, and then we go straight into the Vanguard news. Let's see what's going on inside the comment section. Woodhouse says, Miles, you look very well today. Thank you so much, Woodhouse, for that, brother. Michael says, happy birthday, Lena. Best wishes. Let's go. Very good. Thanks. Let's go, Woodhouse. Evening, Miles and CMF. Jason, good to see you. How you doing? How you been, brother? Peg, hi, Miles. Hope you're doing well. Hi, CMF. Peg, good to see you. How you doing? How you been? Evening, Miles and CMF peeps. Sempre, good to see you. How you doing? How you been? Susie says, happy birthday, Lena. I got to get in on the lounge somehow. Yes, definitely, Susie. Join the Telegram group. And direct message me on X, or I'll just send it to you on X on direct messages, the Telegram group. Now, Vanguard. Vanguard has been a very big hypocrite towards Bitcoin or crypto assets in general, and even refused essentially to offer ETF services to any of their client base, you know, for the longest time. And it turns out that Vanguard is the biggest holder of MSTR stocks, who is basically Strategy, who basically owns a tremendous amount of Bitcoin in their treasury. So what happened to Vanguard's big speech a while ago with, we don't support crypto, we think crypto is a Ponzi scheme, is what the Vanguard CEO said, and that we will never offer ETF services. We don't essentially see Bitcoin as a viable asset, it's a speculative asset. This is the big speech Vanguard CEO gave. It turns out Vanguard CEO is the biggest holder of MSTR stocks. So Vanguard becomes the largest shareholder in Strategy and avoids the Bitcoin offerings, but is the biggest holder of MSTR stocks. Vanguard Group has become the largest stakeholder in Michael Saylor's Strategy, previously known as MicroStrategy. Despite acquiring over 16 million shares, the firm continues its anti-Bitcoin stance, not offering Bitcoin to its clients. This move highlights the complicated view surrounding Bitcoin's adoption among traditional financial entities. Isn't that very stupid from Vanguard? What's the point? If Vanguard doesn't see Bitcoin as a viable asset, or cryptocurrencies as a viable asset, let's just say, for example, then why go for a stock that's related to Bitcoin and become the majority holder, but don't want to offer it to your, essentially, your customer base? It's a very stupid maneuver from Vanguard. Annoying maneuver, you could even say. Over 13,000 institutional investors now hold shares in the company. Surprisingly, Vanguard Group, a firm known for its anti-Bitcoin stance, is the largest shareholder with over 16 million MSTR shares. Michael Saylor is essentially, Michael Saylor said is the co-founder of Strategy. Over these 30,000 institutional investors currently hold shares in the company. According to the founder Michael Saylor, this investment reflects a growing trend of indirect strategies to gain exposure, essentially, to Bitcoin without directly offering it to their consumers, reflecting broader essentially market changes as demand shifts. Effectively, Strategy inclusion in the Nasdaq 100 index enhances the institutional and retail appeal, attracting over 814,000 retail holders due to its BTC accumulation strategy, which parallels to the broader crypto sentiments. For the industry, this essentially further cements the strategy role as a essentially persona of Bitcoin ETFs, offering traditional investors large-scale exposure to Bitcoin. The ongoing engagements of hesitant institutions with strategy stocks underlines how traditional financial sentiments towards cryptocurrencies is evolving gradually. What they're referring to is Vanguard being an absolute hypocrite, where they don't offer essential crypto services or essentially Bitcoin to their Bitcoin ETFs to their client base, but they'll become the biggest holder of MSTR stocks. Historical patterns show that increased institutional investments in strategy often results in greater retail interest, both in strategy and in essentially spot Bitcoin markets. This dynamic is crucial as it essentially appears to be poised to echo previous trends where major institutional adoption drives up both strategies, essentially stocks, and Bitcoin's prices. Consistent essentially with its policy, Vanguard continues holding on to strategy without offering direct crypto products, reflecting a steadfast essentially approach despite broader market fluctuations. Strong institutional engagements for strategy potentially signifies forthcoming shifts in the industry, influencing market volatility. This is why I say you should never believe anything that comes out of an institution's mouth, especially their CEO, because they say one thing and do another. We had essentially the CEO of JP Morgan for the longest time essentially coming out and saying he hates cryptocurrencies and essentially hates Bitcoin and Bitcoin's a Ponzi scheme, but his bank essentially holds Bitcoin for its client base and essentially is now, they have their own essentially blockchain token and then they're offering essentially crypto services. So this is why you should never essentially believe a word that comes out of a CEO's mouth from any major established firm out there in the institutional sector, because they all lie completely. Instead of listening to what they say, look at their actions, look at the filings they're doing. Now, the Federal Reserve, the FDIC, and the OCC is what we're going to talk about next. There's a reason why I say actions speak louder than words. Now, US banking regulators have issued a statement clarifying the rules around cryptocurrency safekeeping or custody by banking organizations. The board essentially of governors of the Federal Reserve System, the Federal Deposit Insurance Corporation, and the Office of the Controller of the Currency noted in their press release that the joint statement does not establish any new rules regarding banks' involvements in cryptocurrency, but it's like a green light. Rather, the Federal Reserve, the FDIC, and OCC retreated existing regulatory guidance for banks, emphasizing actionable, essentially, laws. The statement also highlights, essentially, expectations around risk management principles for banks offering crypto custody services. The agencies confirmed that the banks are permitted to essentially to hold crypto assets for their customers. So banks can hold crypto assets for their customers, no problem. Either essentially in a essentially cold storage or non-capacity. Now, however, banking essentially organizations must consider several key rules while offering essentially such services to their user base. Given the complexities of crypto assets and safekeeping, a banking essentially organization board, officers and employees should have essentially the knowledge and understanding of crypto asset safekeeping services to establish adequate essentially operational capacity and appropriate controls to conduct the activities in a safe and sound manner and in compliance with actionable laws and regulations. Now, the regulatory watchdog said in a statement, while a bank can hold crypto assets on behalf of a crypto, the agency reaffirmed that the liberty essentially for safekeeping rests with the bank itself. Now, as such, banks have to assume full control of the assets. In this case, essentially the keys. Per the guidance, a banking organization has to reasonably essentially demonstrate that no other party, including the customer, can access the assets while still under the safekeeping of the bank. So, would you be safe with the idea of possibly sharing your keys, your crypto keys, with the bank? Banks are also allowed to use third-party custody vendors. So in other words, essentially what Ripple, Metico, and HSBC designed, that self-storage, essentially institutional grade wallet they created. Banks are also allowed to use third-party essentially custody vendors. However, the bank in question is the one responsible and will be liable for third-party actions. So let's just say there is a bank out there that decides to essentially work with a third-party wallet cold storage company, and you trust your bank with your crypto assets. And the bank essentially, belly ups and your crypto assets go with it. Essentially, the third party bellies up. Well, essentially, the third party is not liable for your crypto assets. The bank is, because they're the ones essentially who are holding your assets. So it doesn't matter who the bank uses. The bank will essentially fall at fault if anything ever happens to the amount essentially that you lent into the bank for them to hold for you. But the only issue is the keys part, where you have to share your keys with certain banks or any bank out there. The Federal Reserve, the FDIC, and OCC statements comes in essentially observing essentially shifts in the regulatory approach to banks and crypto in the US. The FDIC and OCC have in the past issued key guidelines to banks as they allow for more participation of banking providers in the crypto industry. The FDIC, for instance, released documents related to crypto essentially debanking in February 2025, and in March clarified that banks can engage in crypto-related activities without having to seek prior approval from the agency. The Federal Reserve also issued a similar guidance back in April. So banks technically have a green light from the FDIC, the OCC, and essentially the Federal Reserve to engage with cryptocurrencies. They can custody your cryptocurrencies. Offering services is a bit of a gray area, but they can custody essentially clients' cryptocurrencies. In the past, they couldn't do that. I mean, the OCC and the FDIC, previous essentially chairmen, did tell essentially banks they're not allowed to work with crypto companies, and they're not allowed to essentially open up retail accounts essentially who involve themselves with cryptocurrencies and so on. But that was during Biden's administration, which was an absolute shambolic administration. Let's just be honest with ourselves. But now, obviously, on the Trump administration, the OCC is pro-crypto, FDIC is pro-crypto. Everybody's pretty much pro-crypto in any governmental organization or banking department. But moving on from the FDIC, the Federal Reserve, and the OCC, giving pretty much banks a green light to engage with cryptocurrencies, perfect timing, essentially, to be fairly honest, because we're in the week of crypto legislations. What we're going to be talking about next is a particular country that we've talked about in the past before, once or twice. This country engages a lot with CZ. If you don't know who CZ is, obviously he's one of the biggest people inside the crypto space, the previous essentially founder and also CEO of Binance. So CZ has been going back and forward with this country, trying to help them out to get involved essentially inside the crypto space for the longest time and create some sort of a crypto portfolio. Well, it seems like this country has reached a stage to do this. Kazakhstan Wealth Fund gold FX reserves to be invested in crypto. The report has just come out. Kazakhstan is getting ready to invest their gold in cryptocurrencies and also other reserves. So Kazakhstan's sovereign wealth fund has reportedly identified cryptocurrencies as a viable asset class for conclusion in its country's national reserves. With the central bank drawing lessons from allocation strategies used in Norway, the United States, and the Middle East, according to Khrushchev, a local media outlet registered with Kazakhstan's Ministry of Information, the country plans to invest a portion of its gold and foreign exchange reserves, as well as assets held by its sovereign wealth fund, into crypto-related instruments. That is a very impressive move, because while the United States is deciding what can they possibly invest into cryptocurrencies in that portfolio they've created, Kazakhstan is already getting ready to sell their gold, some of their gold, of their essentially wealth fund, to invest into cryptocurrencies and other assets, essentially they're holding foreign accounts to also sell and get involved in cryptocurrencies. So one country is about to go, essentially head first into investing into cryptocurrencies. Khrushchev cited that the head of the National Bank of Kazakhstan, who said at a press conference that the central bank is exploring aggressive strategies to generate higher investment income, which does not exclude allocating part of its holdings to crypto-related funds. They also pointed to Norway's sovereign wealth fund, for example, the US government's digital asset holdings and initiatives in the Middle East as a potential model. So Kazakhstan is following their footsteps, obviously with the push of CZ. Now, these authorities have certain investments either in crypto assets directly or essentially in exchange-traded funds, and shares of companies that are closely related to crypto assets. The central bank chief also stated that Kazakhstan aims to establish a national crypto asset reserve using digital assets confiscated by law enforcement agencies. The Kazakhstan government forays into digital assets is not unexpected and had previously announced plans to develop a national crypto reserve. However, in his latest comments offering a broad view of the strategy, including the potential allocation of the country's portion of their gold and foreign exchange reserves going into cryptocurrencies, that's a essentially new one. In addition to managing state-held crypto assets, Kazakhstan is also expanding its presence in the digital asset sector. The government recently launched a pilot zone to support digital asset payments and broader adoption, part of a broader essentially strategy that began with a rollout of its central bank digital currencies, the digital tenge, back in November 2023. These initiatives align with Kazakhstan's ambition to become a Central Asia leading crypto hub, according to Digital Development Minister, essentially Kashan. Now, however, despite essentially strong regulatory and infrastructure efforts, crypto adoption at the local or retail level remains limited. Also, according to Chain Analysis 2024 Global Crypto Adoption Essentially Index, Kazakhstan ranked 57th out of 151 countries based on transaction volumes and web traffic to crypto protocols and other essentially activity metrics. So Kazakhstan was ranking 57th last year in terms of the amount of volume they bring as a country to the crypto space. Obviously, this year they're probably going to rank a little bit more because they own a lot more ETFs around the world and also a lot more assets in terms of cryptocurrencies and their confiscated assets also. And now they're going to be investing their country's portion of their country's gold into cryptocurrencies. So they haven't said which cryptocurrencies they're going to be buying with the portion of gold they sell from their country or their other assets they sell to enter the cryptocurrencies. They haven't mentioned. If they were going to go only for Bitcoin, they probably would have mentioned Bitcoin straight away. But the vibe essentially, what they're giving off is they're going for a basket of cryptocurrencies, like a reserve basket of cryptocurrencies rather than just one, which always will pay better, 10 times better than going for one particular crypto. Now, moving on from Kazakhstan to El Salvador. El Salvador's Bitcoin reserve has now hit $760 million. It's a new record for El Salvador. El Salvador's bold decision to embrace Bitcoin as a national asset is making waves again. The country's Bitcoin reserves has now reached its all-time high value of $760 million plus dollars, fueled by the cryptocurrency raising market price. President Nayib Bukele administration has consistently purchased Bitcoin since making it a legal tender back in 2021. Despite criticism and market volatility over the years, El Salvador's long-term strategy is now essentially showing significant gains. As of now, the country holds over 2,800 Bitcoins, and its current essentially total value continues to grow in tandem with Bitcoin's bullish movements. Now, El Salvador is the only country in the world to officially have adopted Bitcoin as a legal tender alongside the US dollars. The government has even launched a publicly accessible Bitcoin portfolio tracker, reinforcing its transparency about national holdings. These trade essentially purchases were often made during market dips, showing a buy-the-dip approach that is now paying off, with Bitcoin climbing back to strong levels. The nation's holdings have surged in value, reflecting the wisdom of early adoption and strict timing. The raising value of El Salvador's Bitcoin reserves could inspire other countries to explore digital assets more sensibly. It definitely will also, that essentially other countries will see El Salvador's footsteps, entering the crypto space early as a positive thing, because now El Salvador is sitting at $760 million plus dollars, climbing the ladder to $1 billion worth of cryptocurrencies. It may only be Bitcoin at this point, but it's cryptocurrency nonetheless. So other countries could see this as a movement. The countries who might be struggling could see this essentially as something they can venture into. I'll give you an example. MicroStrategy was the first one to do this whole buy Bitcoin, put it in the treasury to boost their stock price, which is MSTR. Then we had Metaplanet, a Japanese company, follow their footsteps. We had two essentially Canadian companies follow their footsteps. We had a Hong Kong company follow MicroStrategy's footsteps. So when you see a country doing that particular move, then obviously other countries will take interest in that matter. For example, Kazakhstan, who took a very big interest in what the US is doing with their crypto portfolio, the Middle East, and so on. Now, moving on from El Salvador to Grayscale. But before we talk about Grayscale, let's go inside the comment section first. Let's see what's going on there, and then we go straight into the next news. And as I said previously, this is live, which means if you do have any questions or statements, put it down in the comment section. More than happy to read them out and give you a response. So let's see where we're at, and then we'll go straight into the next news. We were at here. Good evening, Brother Miles and CMF. Better late than never. Let's go, funky brother. Good to see you. How you doing? Scott says, hello, family. Let's go, Scott. Hello, Miles and CMF. I hope you had a good day. I did. It was a very busy day. Let's go, Scott. How you been? Yo, Miles. Knox, good to see you. How you doing, brother? How you been? Evening. Pure, good to see you. How you doing? How you been? Miles, how about the pump of XRP? A little is a bit, then none at all. That's facts, absolutely. Miles, thoughts on HBAR and ACH? HBAR, brilliant asset, very good potential ahead of itself. To be fairly honest, big potential ahead of itself. ACH also brilliant, but ACH needs to get off the ETH chain. They have mentioned in the past they're essentially doing their own chain. Once that happens, it will do a lot more better. Will you speak on XDC? Yes, XDC is an incredibly underappreciated asset, in my opinion. XDC could do tremendously well, and it should do tremendously well. And it's definitely an asset if you haven't looked into. Now is the perfect time to look into, because XRP is climbing the ranks. It's in the finance category. XLM is climbing the ranks. It's in the finance category. XDC is in the finance category also, but it hasn't climbed as much. And I think XDC is going to blow through, alongside essentially XLM and XRP. Now, share the live. Let's go, Scott. XRP, XLM, XDC, ACH, and HBAR. Let's go. Let's go, Scott. Peg says, please like, comment, and retweet the live. Let's go, Peg, for saying that. Yes, facts. CMF members, if you haven't already done it, like, comment, and retweet on this live if you watch us on X. And put a comment, obviously, outside the live was what I mean. Hashtag whatever you want, XRP, XLM, Bitcoin, Solana, go for it, go wild. Just like, comment, and retweet. XRP, XLM, XDC, link, ADA, Solano, let's go, Semper. Scott says, I did a great room. Miles, how are you feeling today? I'm feeling okay, Scott, let's go. Good evening, Miles and CMF, Bull XRP, good to see you. How you doing, how you been? Nobody shared the live, I couldn't catch up on time. Bull XRP, sorry about that. Someone does sometimes essentially put the live, or most times put the live essentially inside a Telegram group. I don't know what happened this time. Also, let me... I've pinned the live on X as well. I've pinned the live so people can find it easier as well also. Now, next news on tonight's live. Grayscale. Grayscale has apparently submitted a confidential IPO filing to US SEC. Grayscale Investments, a digital currency group subsidiary, has made its confidential draft submission for an IPO to the US SEC. This strict move could broaden its investor base via public market offerings. Founded by Barry Silbert, Grayscale's recent advancements include their successful SEC legal battle, leading to essentially spot ETF conversions for key products. What that referring to is the Bitcoin ETFs, because Grayscale was the reason we had Bitcoin ETFs the way we did, because they sued the SEC and won within a month. The IPO could also affect Grayscale's significant, essentially, assets under management, particularly Bitcoin, Ethereum, and other assets that are essentially they're holding. Historical precedents such as Circle's stock surge indicates that strong market appetite for crypto-related IPOs. Grayscale is about to go IPO. Now, sectors may essentially experience shift due to Grayscale's increased public market presence. This reflects a broader trend such as essentially the eToro's successful US IPO, mirroring essentially increased financial sector acceptance of cryptocurrency companies. Potential financial regulatory outcomes include increased liquidity in public markets and better regulatory clarity. The timing of the IPO aligns with growing legitimacy around digital assets, supported by Grayscale's involving financial strategies. Grayscale Investments, via official press release, Grayscale has confidentially submitted a draft registration statement for an initial essentially public offering to the US SEC. The registration is expected to take place after the SEC completes its review process, subject to market and other conditions. So Grayscale has silently applied for an IPO. It will play very positive for the crypto space, obviously, when it gets accepted. Now, moving essentially away from the Grayscale news to the biggest news inside the crypto space right now. Crypto Week that's going on. Crypto Week started today inside the United States, where they're going to be discussing the Clarity Act, the Anti-CBDC Act, and essentially the Genius Act, which is related to stablecoins. That is the biggest news essentially that's happening right now inside the crypto space. And everybody wants to know, what's the outcome of all of this? Are we going to get them essentially approved? Is it just going to be discussions? Well, the thing is that's going around is that on Wednesday or Thursday, we're going to have maybe something passed during this crypto week. And also, we could possibly get all three passed is what's going on. It's not essentially a 100% guaranteed type of scenario. But if even one gets passed, or two gets passed, or three gets passed, the crypto space will obviously react in a positive way. The Stablecoin Act, essentially the Genius Act, should be the easiest one to pass because it's just ready to be passed, to be fairly honest. And also perfect timing with essentially Ripple applying for that banking charter license and the Fed account and so on. Now, Crypto Week in US Congress. What to expect from the biggest essentially push yet for the crypto space. Congressional Republicans are preparing for Crypto Week in what may be their most essentially push yet on digital asset legislations, according to a report that came out today. The House is essentially set to vote this week on 3 separate bills. Addressing stablecoins with the Genius Act, the crypto market structure with the Clarity Act, and essentially a potential ban on CBDCs. But essentially the CBDC is related to Surveillance Act. It's not a ban on complete CBDCs. Everybody assumes that the CBDC, essentially anti-CBDC Act, is a complete ban on CBDCs in the United States, which is wrong. It technically states that it's just related to the Fed. The Fed cannot essentially create a CBDC or be in charge of some sort of a CBDC. But it does leave room for essentially other agencies to take over and create some sort of a CBDC. Now, Crypto Week is scheduled to start today with the US v. Roman Storm cause that's put the founder of Tornado Cash on trial for money laundering also. The next immediate step, the next immediate essentially step will indicate, the next immediate step is likely the passage of the Genius Act. As I said, the stablecoin act should be the first one to pass. A Senate-oriented bill focused on regulations of stablecoins. House Republicans have indicated that they essentially will advance the Senate version without amendments to expedite its arrivals, as essentially put it on President Trump's desk. This would mark the first major crypto legislations to clear both the chambers of Congress. A broader market structure will be the Clarity Act, authored by the Financial Services Chair French Hill, which is also scheduled for a vote. Unlike the Genius Act, the Clarity Act bill faces more uncertainty. The GOP lawmakers are seeking bipartisan support to demonstrate viability in the Senate, where 60 votes are required. Last year, 71 Democrats supported a similar proposal. That number may shrink due to opposition tied to Trump's administration's crypto involvements. House Democrats, including Maxine Waters, are expected to resist essentially the bill that's going on unless additional governance provisions are added. The Anti-Crypto Corruption Week is also going on. At the same time, we're having the Pro-Crypto Week, and it is the label of some essentially using to push back against the view as conflicts involving Trump's linked crypto ventures. Meanwhile, a third proposal seeks to prohibit a U.S. central bank digital currency. It is unlikely to advance in the Senate, according to lawmakers familiar with the process. Rep. Warren essentially Davidson, a Republican who generally supports crypto policies, posted on X that he will vote against the Genius Act, calling the strategy to separate the bills designed to ultimately fail. The bills will protect investors, consumers, and make America, essentially, as President Trump wants, a leader of financial technology and crypto and digital assets innovation, Hill said. The House Rules Committee meets today to set the voting schedule. Discussions this week will help determine whether the current legislation environment delivers a long-standing industry priorities or stalls once again due to political division. Are we going to be having the Democratic Party throwing a hissy fit and not being able to vote in favor of cryptocurrencies? Probably. Are all Democrats going to be in absolute ARSE, HOLE? Well, we don't know for a fact, but are they all going to be one of those types of people? Let's see how that's going to be playing out. Because, Maxine Waters, who was leading the moronic march of the anti-crypto week, because she hates Trump and anything to do with Trump and hates the idea of the retail section making a quick buck for themselves. The Democratic Party hates, honestly, I've said this before and I'll say it again, the Democratic Party hate the idea of the essentially retail section making money whatsoever. The Democratic Party love the idea of keeping the retail section poor because that benefits them more. Because when a person is hungry, he listens. When a person is fed, he doesn't. So the Democrats love the idea of keeping the retail section hungry. Easiest way to put it. Now, the frequently asked questions that's going on right now regarding these crypto space, essentially regarding the crypto week that's going on. What's at stake beyond legislations? If passed, these bills could redefine the US regulatory approach to crypto for years, influencing how stablecoins are issued, which agencies essentially oversee tokens, and whether essentially digital dollars are allowed to exist. Number one question essentially is is staking allowed? Possibly yes. Staking should be allowed as well under those legislations when it comes to especially stable coins like digital dollars. The next question that people essentially have on their mind regarding this crypto week that's going on is, how does this impact existing crypto firms? This crypto week that's going on, how does this even impact the current crypto companies? Well, if the bill advances, exchanges, stablecoin issuers, and custodians may face streamlined federal compliance obligations, replacing the current patchwork of state-level requirements. The simplest way to put it is there'll be no more gray areas for any crypto company out there, and they will have to be obliged by essentially any law that's put into place for them to follow. So no more gray areas of getting away with this and that, which isn't a bad thing, because gray areas stop certain investors from entering the market space because there's gray areas. Sometimes if you go too far into the gray area, the SEC comes knocking on your door, or the CFTC comes knocking on your door with a massive bill, which is a fine. So removing gray areas from the crypto space is actually a positive thing. Could this affect CBDC plans in other countries? Some people have questions on the CBDC situation because we have the Anti-Surveillance CBDC Act that's also going to be discussed during this crypto week. So how does this affect CBDCs inside the United States? Well, if the US formally rejects a CBDC through legislations, it could create a divergence from international monetary authorities exploring central bank digital currencies. In other words, if essentially anti-CBDC bill gets passed, then the US will fall behind, because 98% of centralized banks around the world are in CBDCs, according to the Bank of International Settlements and the Monetary Authority. And the International Monetary Authority. 98% of centralized banks are in CBDCs. They're either in research stage, testing stage, and some countries are in essentially implementation testing stages. For example, Australia, I revealed essentially 2 nights ago, I think it was on Friday or Thursday on this live show, I revealed that Australia's central bank, for example, has entered a stage of piloting real, essentially CBDC, wholesale CBDC money to a certain user base to start using. So some countries are actually getting to stages where they're getting ready to launch some sort of a CBDC, very close to launching a CBDC. So 98% of centralized banks around the world are CBDCs. If the US essentially, cancels out the CBDC bill, then they're basically digging up their own grave. So the chances of anti-CBDC bill actually being passed is pretty much extremely low. That bill will never pass. And even if it does, in some miracle way, anti-CBDC bill passes inside the United States, it doesn't really indicate that nobody else is allowed to enter and bring a CBDC in. So the Fed isn't allowed to create a CBDC. Anything involving the Fed, they're not allowed to create a CBDC. However, they can essentially, a third-party entity can create a CBDC for the United States, because that's not really, in the bill. The more lines of the Fed can't create and the government can't create, and so on and so on. But it does leave room for error. But the chances of a CBDC bill, anti-CBDC bill passing inside the United States, slim chance, because 98% of centralized banks around the world are already in CBDCs. If the US does that, they're digging their own grave. Now, BlackRock. BlackRock's Bitcoin ETF eyed to hit $100 billion milestone. BlackRock essentially is breaking records left, right, and center with their Bitcoin ETF. It's become the fastest growing ETF in history, pretty much you could say. BlackRock's Bitcoin ETF, managed by Larry Fink, is predicted to reach $100 billion in assets within a month. According to Bloomberg analyst Eric, the potential essentially milestone for BlackRock's ETF signifies accelerating growth and continued institutional acceptance, impacting Bitcoin's market dynamics. BlackRock's iShare Bitcoin Trust, IBIT, stands at the forefront of the cryptocurrency ETF market, and assets essentially under management have surged beyond $80 billion. Analysts like Eric highlights IBIT's rapid progress, noting its pace exceeds previous records. The essentially fund's explosive growth has also issued and been driven by strong institutional flows and market demands. Eric, also the senior ETF analyst of Bloomberg, stated IBIT reached $80 billion in just 374 days, roughly a fifth of the time it took the previous record holder Vanguard S&P 500 ETF to reach that same value, which Vanguard, it took 1,814 days to reach that. And that's the record holder for an ETF. Our Bitcoin's ETF done that record in 374 days. It's tremendous. Bitcoin is essentially BlackRock's essentially BlackRock possesses over 50% of the US in Bitcoin ETF market shares. Inflows reached $1 billion in a single day, showcasing essentially investor interest. With 0.25% annual fees, essentially competes strongly in the ETF space right now. The Bitcoin market has similarly benefited. Bitcoin's price essentially exceeded $118,000 after ETF demand increased. This essentially historical rise underscores the relationship between Bitcoin and ETF dynamics. Experts anticipate essentially sustained growth with broader economic implications. Analysts highlight how past commodity ETFs like GLD catalyzed market changes. The crypto sector could also see elevated investor essentially interactions due to these Bitcoin ETF trends that are going on. Analysts indicate that the ETF asset is redefining traditional investments, emphasizing Bitcoin's evolving role in institutional portfolios and linking previous success in ETF history to current performances. Historical patterns suggest that similar ETFs have also influenced asset pricing, hinting at the potential long-term impacts on Bitcoin. Once again, BlackRock has just broken another record. I mean, even Eric from Bloomberg, who's an ETF specialist analyst, who's come out and said it as well. I mean, BlackRock is on the way to 100 billion, essentially, worth of Bitcoin ETFs within a month. In other words, within this month. That's just a tremendous record. Honestly, who knows what the next ETF is going to be essentially breaking those records. Is XRP going to be the next ETF that essentially breaks those records? Let's see. Now, a lot of people will say that will never happen. XRP ETFs, once they're approved, they will never smash Bitcoin's record with the amount of volume they bring in. You never know. You never know. Now, CZ is what we're going to talk about next. CZ says Bitcoin current peak may soon look insignificant. So CZ has got a new perspective on essentially where Bitcoin is headed and essentially where we're standing right now. And here it is. Bitcoin's recent surge to all-time new high has drawn fresh commentary from Binance's co-founder, CZ. He believes the current price level may appear minor when viewed in the future, much like past milestones that now seem relatively minor. In other words, he's referring to, for example, when Bitcoin was at $10. Seems very minor significant right now because we're sitting somewhere around over $100,000 over Bitcoin. According to CZ, he shared his views on social media platform X. Bitcoin's journey has consistently shown that former all-time highs often fade in significance. He recalled buying Bitcoin in 2014 and holding it until its price crossed $1,000 in 2017, a major milestone for the cryptocurrency market. As the essentially reporting date, the price of Bitcoin was $122,156, now exceeding by more than essentially 122 times the $1,000 benchmark that once marked a turning point for the asset. The approval and listing of several spot Bitcoin ETFs have largely contributed to the recent surge of Bitcoin. That essentially regulatory development drew institutional investors and greatly enhancing essentially market demands. This steep rise in activity has been essential in driving Bitcoin's value yet to another high as of today. Since the approval of the spot Bitcoin ETFs by essentially the SEC in early 2024, Bitcoin has gained over 215%. Market analysis credit this rise to increased institutional adoption, which has reshaped investor confidence and market behavior. This institutional backing is leading some observers to revisit how Bitcoin's price should be elevated. As large entities continue to buy and hold Bitcoin, the definition of what constitutes as a peak may evolve. CZ's statements aligns with this view, suggesting that current highs could eventually essentially serve as a support levels in a larger upward momentum. The pace essentially at which Bitcoin's historical highs become outdated has accelerated in recent years. Growing interest from traditional essentially financial institutions and regulatory clarity are contributing to this shift. With broader adoption on the way, the digital asset future valuation could surpass many current expectations. CZ's latest comments points to a broader shift in how Bitcoin's value is perceived over time. As institutional involvement grows and the pace and the price levels rise, current peaks may become benchmarks of the past, and that Bitcoin's trajectory continues to challenge traditional views and market cycles and the long-term potential. You could say he's pretty much on the lines of what MicroStrategy, essentially Michael Saylor said once on the news, that Bitcoin has has the reach or can reach essentially $1 million per token. Obviously not, this year or next year or so on, but it can reach those prices, is what Michael Saylor said. And CZ is maybe on the same lines as Michael Saylor, you could pretty much say as well. Now, moving on from the perspective that's come out from CZ on essentially where Bitcoin headed, to economic advisor Kevin. Economic advisor Kevin argues that Trump's tariffs aren't causing inflation. As much as a lot of people are essentially on the news, like CNBC News, NBC News, ABC News, or The View, would like to say that Trump is ruining the US economy with tariffs, there have been multiple economic advisors that have come out and said that Trump's tariffs aren't really damaging the economy whatsoever, and that essentially, even the Fed, the former World Bank chairman, has also come out and backing Trump on his views and saying tariffs aren't really ruining the economy whatsoever. So here it is. Patriotism is now being used as an inflation control strategy by the White House, according to economic advisor Kevin, who told CNBC Squawkbox that Americans are choosing to buy more local products because of President Trump. Trump said America first, which means he wants American businesses to grow and foreign, essentially, businesses to shrink slightly so that American businesses can grow. If American businesses grow, that means they will be essentially creating more American jobs, which means more Americans will get hired. If foreign businesses grow outside of America, then American employee lists start to shrink, and people in America will start losing their jobs because all foreigners outside of the United States will be taking their jobs in factories. But Trump is trying to bring that back into the United States by bringing jobs back into the United States, by making Americans purchase American products to create American jobs. It's a cycle. So when asked why inflation hasn't surged under aggressive tariff policies, Kevin replied, "There is, I think, a lot of patriotism in the data." He said this shift in consumer behavior is helping offset price hikes that many economists have long predicted. According to CNBC's Kevin, he argued that prices on imported goods actually fell between December and May, a period when the US rolled out several tariff measures under Trump's direction. Instead of climbing, import prices dropped, which the National Economic Council director believes is a direct result of Americans preferring domestic goods. Why inflation hasn't went through the roof when Trump is doing tariffs in the US? Because Americans are actually starting to buy American products. The bottom line is people prefer American products, Kevin said during the interview, suggesting that Trump's approach had pushed a buy American mindset on the nation. In his remarks, Kevin doubled down on the argument that Trump's policies have altered behavior to the point where imports are no longer attractive. That Americans don't really want foreign, essentially, products. American citizens just prefer to buy American products, which is bad for China and good for the US economy. He said demand for imports has gone way down, so much that even with the tariffs have been there, we've seen prices go down. That's despite the fears that the new tariffs would drive up everyday cost. His theory is simple. People aren't buying imports. There is less inflation pressure, even with duties in place. He also claimed that countries that the US essentially has trade deficits with are eating the cost of tariffs right now. That means that places like Mexico, China, and Canada are not passing those extra costs onto American buyers, as some analysts had warned. Obviously, Democrats and anybody that's a Democratic analyst also come out a while ago and said Trump is going to ruin American lives with tariff policies and rise up the prices, and nobody's going to be able to afford groceries or fuel or mortgages or loans or car payments. And it worked out the opposite. Even though essentially Jerome Powell refuses to do rate cuts, Trump is still controlling the inflation situation pretty damn well. A lot better than Biden. Still, even the White House admits prices could rise later this year as tariffs continue to stack up on certain countries. For example, the 100% tariff on Russia. Russia does essentially offer a lot of petrol to the world. So far, Kevin insists that patriotic consumer behavior is keeping those effects at bay. So as long as American citizens continue buying American products rather than foreign products, inflation will stay low. But if Americans essentially continue to buy or essentially expand on buying foreign products, then obviously it's going to rack up prices. But Trump has created this American first mindset, which is pushed onto the nation where people inside the United States prefer just to buy American products now, which creates American jobs. But now, not everyone agrees. Ernst, an economist at the Yale Budget Lab and a former chief economist at the White House Council of Economic Advisors under Joe Biden, you can see where this one's going. This man was an economic advisor under Joe Biden. How was the economy under Joe Biden? Was the economy good under Joe Biden, or was it bad under Joe Biden? So this man was an economist under Joe Biden, and he disagrees with Trump. I'm not surprised. He was under the essentially Biden administration, which was the worst era in American history under Biden's administration. Biden wasn't even there most of the times. Nobody knew where he was. He was probably napping in the background, was essentially sleeping in the background. So I'm not surprised that this man is coming out and saying Trump is ruining the US economy. He criticized the White House's math. Ernst wrote that the method used in the White House report will essentially underestimate tariff effects in their import indices. He also cited recent data from Harvard University Pricing Lab showing that the import prices have actually gone up since March, right when the new tariffs on Mexico, Canada, and China began. Well, if Ernst realized what the previous essentially analyst just said on the essentially CNBC Squawk Box, which was Americans are buying American products, which keeps the price down. He's referring to prices are going up on foreign products, but Americans are buying American products, which is why inflation is down. And he's saying the prices on foreign products are going up. Nobody cares that essentially foreign prices are going up that much because Americans are buying American products, which is why the prices are staying low. This is why he was Joe Biden's essentially economics analyst, because he's an absolute moron. Another reason prices haven't surged yet, according to some critics, is that the imports stacked up in advance. Trump's administration came prepared by stacking up on things. By buying products early before tariffs kicked in, they avoided essentially immediate price increases. Trump does tend to give the market hints of where it's going. Sometimes he might tweet out, buy now, and 5 minutes later, the market starts shooting up. Trump is the only president I've ever seen in my lifetime that gives hints on when to buy and sell. Another reason prices haven't essentially surged yet, according to some critics, is the import situation. Now, that stockpiling brought time, but doesn't cancel out the long-term risk. And while Trump once unveiled the major tariffs during what he called the Liberation Day back in April, many of those plans were temporarily shelved, further delaying the expected inflation impacts. Despite all the noise, markets didn't collapse. Remember when the Biden administration, the Democratic Party, Elizabeth Warren, Pocahontas coming out and saying Trump is going to ruin the American economy, we're going to collapse, America is going to go to zero with his tariff policies and so on. Has America collapsed? No. Is America still standing strong? Yes. Is the dollar still the #1 currency? Yes. Has inflation been controlled? Yes, even though we don't have rate cuts. Has he put America first? Yes. So what happened to the Democratic Party saying the US is going to go into a Titanic situation? It still hasn't happened yet. I don't think it's going to be happening at all. The Democrats do, and the Liberal Party do tend to essentially over-exaggerate everything, let's just say. Not the people, essentially not Democratic people. When I refer to Democrats, Liberals, and Republicans, I'm always referring to the governing bodies, not the people that support them. Now, despite all the noise, market didn't collapse. Trump announced the US will impose 30% tariffs on both the European Union and Mexico starting August 1st. Markets didn't collapse. Leaders in both regions said that essentially they'll continue negotiations this month, hoping to bring the rate down before the deadline. Even with that threat looming, investors were calm. The Dow Jones Industrial Average went up 28 points, 0.1%. The S&P 500 rose 0.1%, and the Nasdaq gained 0.4%. Traders seem to believe that some of these tariffs may be essentially negotiated away before they take full effect. But attention isn't just international. Trump is also pressuring the Federal Reserve again. Over the weekend, Kevin told ABC News that Trump can fire the Federal Reserve Chair Jerome Powell if there is cause. The only way the Federal Reserve Chairman can essentially be fired, let's say, under the lines of if there is cause, if he's not upholding his responsibilities, his duties, you could say, up to a certain extent. So there are some reasonings of where he can be removed if he doesn't resign himself, or the other option is just find something on him. That came as Trump's officials started reviewing renovation costs at the Fed's essentially Washington, D.C. building, raising eyebrows about whether the administration is digging up for leverage against Powell. What they're referring to there is that they have found something on Jerome Powell, on mismanagement of money, on the money that was supposed to be spent on essentially refurbishing the Fed building, but there was too much money to refurbish one building, and the numbers don't add up, is what the essentially Trump administration is trying to say. Ironically, when this news first came out that essentially the Trump administration is looking into regarding essentially the Fed spending too much money on one building refurbishment, is the exact same timings when we started getting hints that the Fed chairman might be resigning. So do they have him is the question. Is Jerome Powell exiting because he's mismanaged money? Probably yes. It's a politician. As much as he likes to say, I'm a Fed chairman, I'm not a politician, I'm independent, is what Jerome Powell would say. We all know for a fact they're not independent. Someone gives the orders and they take action. And it's not Trump that's giving the orders, essentially, but it is Trump finding something on him to remove from his seat. Now, moving on from the Fed chairman to the Bank of England. The Bank of England's governor has come out and warned against essentially issuing their stablecoins. Banks issuing stablecoins. Before we go through that news, let's go inside the comment section. First, as I said previously, this is live, which means if you have any questions or statements to make, put it down in the comment section. More than happy to help you out. So let's see where we were at inside the comment section, and then go straight to the next news. We were here. Nobody shared. Oh no, we were here. Hey Miles and CMF Comatose, good to see you. How you doing? How you been? I own some. But nothing like XRP Chainlink holding long term. Okay, let's give Scott. Why bull run taking long time? Bull run is not taking a long time. It's just brewing for a very crazy bull run. And actually, I'll explain to you what I mean after this news. Morning, Miles and CMF. Shelly, good to see you. How you doing? Morning, how you been? Now, Bank of England. The Bank of England's governor, Andrew Bailey, has come out and said banks in the UK should not rush into creating some sort of a stablecoin by themselves. Hi, Miles and CMF. Lottie, good to see you. How you doing? How you been? So here it is. Andrew Bailey, the governor of the Bank of England and chair of the Financial Stability Board, has issued a strong warning to commercial banks regarding the issuance of stablecoins. Because, for example, inside the United States, certain banks are trying to create their own stablecoins. Hong Kong's banks are trying to create their own stablecoins. Dubai banks are trying to create their own stablecoins. German banks are trying to create their own stablecoins. It's just going to become novelty items. At the end of the day, let's just be honest with ourselves. There's going to be one or two stablecoins the world is going to be reusing from each essentially currency. There'll be one or two British pound stablecoins, one or two US dollar stablecoins, one or two euro stablecoins, one or two yuan, ru. You get the picture. It's not going to be 20 different types of stablecoins from each currency that the world is going to be using as we go ahead, because that's just stupid. Honestly, there's no other way to put it. It's just stupid to have 25 different versions of a digital dollars, 25 different versions of the EU essentially stable coin and the British pound stable coin and the rupee stable coin. So because that's just ludicrous. It should just be one or two, because that would just create so much confusion. And we don't know which one will have them. Some people might not know which one holds the most liquidity. It will create so much confusion. And as Hong Kong put it best, Hong Kong is about to be approving stablecoin issuers inside of Hong Kong to release their stablecoins on a legal basis. And even Hong Kong themselves said that we're going to be doing essentially 1 to 3, maybe 4 past only, no more. After that, it's just stupid. They didn't say stupid, but they were referring to it. Has issued a strong warning to commercial banks. So the Bank of England, essentially Andrew Bailey, governor, has issued a very strong warning to banks in the UK about creating their own version of stablecoins, each bank creating one stablecoin. He stated that allowing banks to create their digital tokens could threaten financial stability and weaken government control over national currency. That's also true as well. The Bank of England is worried that if essentially certain banks start creating their own stable coins, that people will stop essentially, they'll go towards these certain stable coins, and that the Bank of England will essentially lose control. If the Bank of England releases a CBDC at a much more faster rate, then obviously they'll be able to gain control once again. And as JP Morgan essentially put it as well, that they're not worried about essentially, JP Morgan said their biggest worry is that stable coins are not going to be the main takeover, and that CBDCs are. That's the exact words that came from JP Morgan about 4 days ago, which is their biggest worry is that CBDCs is actually going to take over, and it's not going to be stable coins. So this is like a push for the Bank of England to hurry up and get into essentially cryptocurrency regulations and regarding their own wholesale CBDC and retail CBDCs and so on. But in a recent interview, Andrew Bailey emphasized that essentially introducing private stablecoins carries significant risk, including illicit usage and the possibility of financial fragmentation. He described these types of assets would avoid the central monetary systems, which pose problems of control and regulations. Bailey proposed that rather than creating stablecoins or a central bank digital currency, banks ought to consider tokenizing existing deposits, which is a very stupid idea. Such an approach could introduce digitalization without disrupting the banking system and creating uncontrollable alternatives. Just to point this out, the Bank of England might look like it's not in CBDCs or creating CBDCs, and they just want to go to tokenization. They're talking absolute load of bollocks, because the Bank of England is actually in CBDCs. You could go to the Bank of England website and they have a search bar and just type in the letters CBDC, and you'll have multiple PDFs coming up of the testings that the Bank of England has been doing on CBDC usage. The Bank of England's stance differs from policies considered in other languages, essentially in other large economies. Bailey mentioned that the United States seems to approve stablecoins, and the European Central Bank is making progress with also digital essentially currencies. Bailey also addressed that the broader global approach to digital assets. He called on central banks around the world to be cautious and prioritize financial stability in the development of any digital currency framework. In response to recent essentially developments in the US, he disagreed with President Trump's essentially apparent support for stablecoin expansions. According to Bailey, neither the US nor the European Central Banks is in the process of moving towards deposit insurance, an event that Bailey feels will be more stable and fit the nature of modern finance. So, as the rest of the world is going towards CBDCs or stablecoins or even both, the majority of the world is already in CBDCs. As I said, 98% according to the Central Bank of International Settlements, PDF document, and the International Monetary Fund, and the Atlantic report as well regarding CBDC. So 98%. Putting that to one side, the Bank of England has decided to go on its own path also regarding issuing essentially deposit tokenization. Nobody's essentially entering into this field. The Bank of England just wants to be unique. I think what should be done is that Andrew Bailey should be removed as the governor of the Bank of England, because what an absolute moron. The rest of the world is heavily into CBDC testings, wholesale and retail CBDC testings, and into stablecoins. And Andrew Bailey goes, I want to do something different. What are you, 5 years old? Just join the bandwagon. Everybody's getting to a level where they're going to be releasing some sort of CBDCs or essentially stablecoins, and you want to go what, on your own separate path? For what reason? Moreover, Bailey made the population essentially remember that cryptocurrencies cannot be viewed as real money. So you can see where Andrew Bailey essentially stands. He doesn't see cryptocurrencies as real money, even though cryptocurrencies are backed by, for example, stablecoins. Stablecoins are backed by what? Gold reserves, essentially US debt, US yields, and US fiat currencies, and so on, which is what the rest of the world relies on. So this argument that cryptocurrencies aren't real money that you get from bankers sometimes, CEOs, co-founders, executives, or even your friends and families and work colleagues who, say to you, cryptocurrencies aren't real money. They can never be real money. Well, they can, and they are. Because if it's not real money, why does MasterCard essentially partner with Uphold to create a bank card for you to spend your cryptocurrencies? If cryptocurrencies are not real money whatsoever, and it's just imaginary money that has no value and doesn't exist, why does MasterCard essentially go headfirst into crypto, essentially, buildings and platforms and so on, to release bank cards? Why does MasterCard have a crypto bank card with Uphold so people can spend their USDT, so people can spend their USDC, so people can spend any cryptocurrencies they may have on their Uphold accounts? If it's imaginary money, why has MasterCard went for the trouble of creating a bank card to spend cryptocurrencies if it has no value? Why has Visa done the exact same thing. Why is there essentially such thing as MasterCard partnership with Coinbase, MasterCard partnership with Binance, MasterCard partnership with essentially, even MoonPay has just partnered today with essentially Revolut Bank. If, again, cryptocurrencies have no real value, it's just imaginary money, is the number one question, essentially is the number one statement people always make, as because it just shows your level of IQ, which is none. Because if it's not real money, then it can't be spent like real money. But it is being spent like real money. Because if MasterCard and Visa are going out of the trouble to connect it to so you can spend your cryptocurrency money, then it's real money. It's not fake money, is it then? Because if I can spend cryptocurrencies through a MasterCard bank account on an Uphold account and buy groceries, pay for my rent, pay for my mortgage, pay for my car loans, pay for any payments, then it's real money. It's not imaginary money or fake money. So honestly, I'm getting tired of the stupid statements some of these bankers and governors and politicians make that crypto has no real value, it's not real money, but it's being spent like real money, to be fairly honest. So moreover, Bailey made the population remember that cryptocurrencies cannot be viewed as real money. What an idiot. He cautioned against using digital assets to what money is really required to do, and using them might mean essentially taking needless risk for investors. Again, what an idiot. The Bank of England's essentially stance reinforces the UK's cautious approach to digital currencies by warning against banks' issuance of stablecoins. Bailey signals a preference for digital essentially evaluation within a secure and regulated financial framework. Honestly, a lot of things need to be changed inside the United Kingdom. One, starting with the person sitting at the top, and second, with Andrew Bailey. They need to be replaced by people who are a lot more educated in fields of where we're heading towards, which is a digital world. Because Andrew Bailey, as the governor of the Bank of England, we're going to fall behind. Already we're falling behind. The EU has excelled so much in terms of regulations. The US is aiming for the capital of cryptocurrencies. The Middle East is pretty much all over it regarding cryptocurrencies. Even China, who banned cryptocurrencies, is using Hong Kong as a playground for cryptocurrency regulations. And the UK's bank governor is coming out and saying crypto's imaginary money. That was a statement people made about, 5 years ago inside the crypto space? How about you grow up and get with the times? Because things are changing. Now, Bernstein. And just to put in perspective, that was the perspective from the Bank of England's governor. And this is the perspective from Bernstein. Bernstein essentially has come out and said that bull cycle will be a long movement. Remember when I told everyone that once we get regulations approved inside the crypto space, it's going to be up, 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 up. Once we get regulations essentially approved inside the crypto space. Well, because regulations equals to utility, Bernstein essentially has come out and said that where we're heading towards inside the crypto space is it's brewing for something that's going to just keep on going up. Leading cryptocurrency, essentially Bitcoin, started US Crypto Week now, and cryptocurrencies in general, with new records, and the rise is expected to continue. At this point, the Wall Street-based asset manager Bernstein predicted that Bitcoin will reach, for example, $200,000, driven by a corporate boom. According to the block, Bernstein predicted that Bitcoin could reach $200,000 by the end of 2025 or the beginning of 2026. He expects factors such as an increased institutional adoption, regulatory clarity, and increased blockchain integration to be influential in this rise. Analysts said that this particular cycle that we're in, Bernstein, this particular cycle that we're in, will differ from past retail investor-led bull runs. I've said this a million times, and I'll say it a million times more. The cycle we're in, as much as some people inside the crypto space will say, oh, it's like the previous cycles, don't worry about it. It isn't. And how could it be like previous cycles? Because the ETFs, the ETPs, the institutions, the regulations, and everything else is coming with it. Countries aiming for essentially to create a crypto portfolio. American states are aiming for to create crypto portfolios. Banks are creating crypto portfolios. Institutions are creating crypto portfolios. There's ETPs, there's ETFs, there's the regulations, there's utility. There's so much at play. For someone to be stating the most basic statement of, oh, it's like previous cycles. It isn't. Even Bernstein says it essentially, they're seeing it as, all analysts in that perspective are saying it as essentially, this is nothing like the retail past cycles we've had. because it's a different ball game. In Grayscale said the exact same thing. I said, putting aside what I said, because I said this 2 years ago, but even Grayscale is saying it, even now Bernstein is saying it right now, we're in a different ball game. And once we move forward, it's pretty much regulations, which equals the utility, which means up, up, up for certain crypto projects that have contracts, licensing, the utility in place, ready to launch off. Along, and essentially, he said in his own words, the analyst noted that this crypto bull cycle could extend into 2026. This current bull cycle that we're going to, essentially, it has started, that we're in slightly, it's going to extend into 2026 and beyond, in my opinion. Because the more we go towards essentially stable coins, essentially the more we go into regulations, the more we're going to go towards essentially utility. The more banks are going to start getting more involved into essentially cross-border payments, for example, tokenization. Companies will start going more into tokenizations, essentially building properties, bringing everything onto the blockchain. And the blockchains that are going to be chosen for tokenization of the real estate sector in the US or the UK or the EU or essentially the Asian market spaces, the Middle Eastern market spaces. The possibilities of the amount of liquidity coming into the market is just ridiculous. So Bernstein stating that we're going to go in this cycle that we're in, this bullish cycle that we're in, it's going to extend into 2026. And in my opinion, it's going to go even beyond, because there's so much that still needs to be happened. And right after regulations, when it starts happening one by one, it's going to be like a domino effect of going up. Or even as Peter put it, up, up, up. A long and essentially gurgling bull market is on the horizon, is the exact words they used. The bull market is no longer driven by individuals like it was in the past, but by institutional adoption. As I've said previously, what we're in is an institutional run, which is very different to the bull games we were playing before, which was retail section. Analysts also said that Bitcoin will continue to be the world's monetary reserve asset, essentially, and be adopted as a reserve asset due to its increasing institutional adoption and its ability to act as a global hedge against inflation. Bitcoin as a reserve asset makes sense. Bitcoin for finance and payments makes terrible sense. As institutional adoption increases, incorporating Bitcoin into their portfolios will become a trend, and cryptocurrencies in general, the further support essentially of the $200,000 projection that's heading towards us. Additional increased regulatory clarity on crypto assets in the United States will further accelerate institutional adoption. Now, on the topic of up, 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 and essentially this is an institutional run, Bernstein's perspective also that we're going to be going higher and higher and higher, extending to 2026 and so on the cycle that we're in, because this is a crazy institutional run and a crazy regulation run. To XRP news. So here it is. Crypto whales, XRP has been doing tremendously well for itself, to be fairly honest. It's been doing tremendously well. XLM has been doing tremendously well as well. HBOS has been doing very well for itself as well. XDC has done quite well for itself as well. AVAX is doing well. Solana is doing okay. It's just moved 4% or 5% in the last week, compared to the 28% or 30% or 40% the rest of the tokens are doing in a week. But crypto whales add 2.2 billion Ripple XRP coins in 2 weeks as the price is surging to $3. And it did touch it. Now, the ongoing Bitcoin rally driven token prices to a record high of almost 91,263 British pounds, which is essentially $123,000. The bullish momentum in cryptocurrency markets also lifted XRP price over by 30% in the past 7 days to about £2.22, which is $3 per token during early trading today. Now, XRP's price has reached a record high of £2.85, which is around $3.84 8 years ago, 2018. And experts say it could soon break that record, as an on-chain trends indicate key stakeholders could be gearing up for another historical push. XRP is on its way to break that previous record it had in 2018, which is around $3.84, which means XRP is heading towards 4 and 5 and 6 and 7 and so on dollars as we essentially keep on going by. Now, according to on-chain data from Sentiment, large XRP holders with current wallets holding between 100 million and 1 billion tokens have ramped up their positions since early July. Crypto whales holding XRP increased from 7.6 billion coins to 9.8 billions since 1st of July, a $2.2 billion addition of XRP tokens to portfolios. This jump essentially points to growing confidence among investors aimed at a better regulatory landscape, Ripple's accelerating enterprise adoption, and favorable capital markets environments. In other words, case drops, regulations in place. What's stopping XRP? Nothing. Which means that's when you're going to see XRP shine. And that's why the investor confidence is growing for XRP right now, where 2.2 billion XRP is pretty much added to portfolios. According to essentially the news that's come out, XRP whale wallets holding at least 1 million tokens also reached a new high of 2,743 addresses, which accommodates control of 47.32 billion XRP tokens. Meanwhile, open interest in XRP topped monthly highs of 5.3 billion British pounds, which is around 7.2 billion pounds, according to CoinGlass data, which is not very far from the all-time high of 6.1 billion pounds and 8.3, in other words, billion dollars in January. The current open interest is monumental regarding XRP, from a low of $2.2 billion to $3 billion in April. The US Crypto Week starting today, where policymakers will mull over bills to shape the crypto industry regulatory framework, has also led to a positive developments of XRP. UK-registered cloud mining company platform, also XY Miner, officially announced today that XRP's exclusive contract program for daily settlements, low-threshold startups, and passive income tools for XRP holders worldwide. The British company that said, essentially the UK company that said they're going to be utilizing XRP in their payment systems and so on, today has given the green light. Congress is sending a clear signal that encryption is moving closer to mainstream legal assets. We hope to help users lay out stable income as soon as possible under the general trend of compliance, XY Miner said in a statement. Furthermore, London-headquartered Golden Mining, a global cloud mining platform, also said it overhauled its infrastructure to integrate the XRP blockchain to optimize settlement speed, lower network fees, and support more digital assets to enhance user investment returns. By integrating with XRP blockchain, this British company, we have taken a major step towards creating an efficient mining experience for our users. This move enhances our cross-chain capabilities and increases the speed at which users can receive, and manage and reinvest earnings, said Daniel Gray, CTO of Gold Mining, in a press release. Reports have emerged that XRP's rally has been primarily driven by trading surges in South Korea. South Korea essentially is a massive buyer of XRP. In South Korea, sometimes they do purchase more XRP than they do of Bitcoin. According to Bloomberg, more than 7 million South Koreans, or 15% of the population of South Korea, are now registered on local exchanges. This is probably going to do price discovery in the next 2 weeks, as well as, in my opinion, essentially the analyst, persona of Pentoshi recently essentially also wrote suggesting the token could be breaking above its previous records of $3.40. XRP is getting ready to break its previous record of around $3.48. It's going to that $4 mark essentially, which is good. And if it gets to 4, it's going to 5 to 6 to 7 to 8 to 10 and so on and so on, especially on the regulations. Let's just be honest with ourselves. There's nothing stopping XRP. Case drops, case appeal essentially gets taken away. Regulations drop during this crypto week. We get a hint of a regulation being passed. XRP applying for a banking essentially charter. Also the Fed master account. The Fed chairman leaving. Everything is just lining up perfectly for a ballistic essentially market space of going up. And on that note, we have also reached the endings of tonight's live. So this was episode 333 of the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles, and I host the live that you're watching right now, Monday to Friday, 10 p.m. London time. You can tune into this live, where I share the most recent news on cryptocurrency, CBDCs, AI, politics, and Web3, and I give you my perspective on each article that I do read out to everyone. If you liked and retweeted this live, thank you so much. If you haven't already, just take 5 seconds to like and retweet this live. If you enjoyed it, and tune in every single night, essentially Monday to Friday. And on tonight's live, we talked about essentially XRP, breaking its records and getting close to breaking a very major record. We talked about essentially Bernstein's perspective that the cycle that we're in is going to be crazy long, essentially bull cycle. We also talked about tonight's live regarding the Bank of England's governor's moronic perspective on how the market space should be in the UK. We talked about on tonight's live regarding the economic advisor Kevin, who came out in favor of Donald Trump, saying that tariffs are actually causing a positive sentiment in the US, with US citizens buying American products. We talked about CZ, essentially talking about Bitcoin's peak prices. We talked about tonight's live regarding BlackRock's Bitcoin ETF, once again smashing records and getting close to a very good record. We went through news on tonight's live regarding the crypto week and what's going to be discussed and the common questions which we went through. We also talked about Grayscale submitting confidential IPO filing to the US SEC, which could broaden their range. We talked about El Salvador's Bitcoin reserves absolutely breaking records. We also talked about tonight's live regarding the matters of Kazakhstan's government, talking about how they're going to sell off some of their gold portion of the country and put it into cryptocurrencies and other reserve assets they may have. We also went through news regarding the perspective that came out from the Federal Reserve, the FDIC, and the OCC regarding banks and cryptocurrencies in the US. We also talked about Vanguard being the biggest hypocrite, hating on Bitcoin, but also being the #1 biggest holder of MSTR stocks. And we went through news regarding the EU preparing a $72 billion euro counter tariffs against the US, and through news regarding Trump threatens Russia with a 100% tariff, and also through news regarding the Fed rate pauses, and regarding the Federal Reserve emphasizing independence aimed leadership speculation. If you once again tuning to this live for the first time ever, this was the CMF Live, stands for Crypto Mouse Family. This was episode 333 of the CMF Live. Episode 334 will be tomorrow, 10 p.m. London time, as usual. If you followed me during this live and subscribed to me during this live, thank you so much and welcome to the CMF. If you haven't already followed and subscribed, drop a follow, drop a subscribe. If you're watching on YouTube, subscribe. If you're watching on X, follow. Drop a comment outside live, like, retweet, comment. CMF members, I can only grow this family if every single one of you participate and like and retweet the lives. I can only essentially grow this family with your help, CMF members. So always drop a like and a comment and a retweet if you watch us on X. If you watch us on YouTube, just drop a comment outside live and a like. Now, before we do go, let's move to the comment section first, and then we'll call it the night and regain back to tomorrow. That's where we're at. Pablo, night, Miles at CMF. Pablo, see you tomorrow, same time as usual. Great job tonight. Take care, Miles at CMF. Ray, see you tomorrow, but at the same time as usual. Great live, Miles. Good night, Miles at CMF. Jason, see you tomorrow, same time as usual. Exciting times ahead. Thanks for all the news. Have a great night, Miles. I'll see you tomorrow, same time. Let's go up the stick. See you tomorrow, same time as usual. Great live, Miles. Take care and see you tomorrow. Mike, see you tomorrow, but at the same time as usual as well. I'll be seeing everybody tomorrow from the CMF, same time as usual, 10 p.m. London time onwards for episode 334 of the CMF Live. See everybody tomorrow, same time as usual. Everybody like, comment, retweet, share, and subscribe if you already haven't. See everybody tomorrow, same time as usual.